have a joint or two. I mean, I can see it coming a mile off. You know what I mean?
It'll make binge watching Magnum PI all that much more fun.
Whatever you say. Christian, thank you very much, sir. We appreciate you being here. Thanks very much. All right, look who's here. George C., Annandale Capital Chairman. George, we were going at it several times over the last couple of weeks, arguing about, do you see the bottom? Is it time to buy? Every time you've been on this program until now, you've said, I don't see the bottom, don't buy yet, it's going further down. What are you saying today?
I'm saying people should be very carefully getting in, Stuart. I'm not calling a bottom today. I think we've got a lot of bad news ahead of us the next 2 to 3 to 4 months, but we're down 30%. And if people have dry powder, they need to start looking at it as a gift, that they have something they can put to work at the market at actually attractive prices. The first time we've had attractive prices in several years, and they need to start now. But they need to not try to time the bottom precisely. They just need to get to work. If we go down a lot further, they need to get more aggressive.
Okay, would you go towards those groups of stocks like the airlines, for example, or even the cruise companies, or maybe the drillers? Would you go to those really, really beaten down areas, or would you go for a Microsoft and Amazon?
I might take 10 or 15% of my portfolio and put it in the more aggressive industries that have been severely affected by the China virus. But with 85% of my portfolio, I would be putting it in best of the best. I mean, you're getting to buy Apple today at, $80 off where it was a month ago. I mean, what a gift. I would be going for the best of the best, because the prices are across the board a lot more attractive now than they were then.
Some people call this a generational buying opportunity, a once-in-a-lifetime buying opportunity. Without looking for the bottom, would you agree with that?
I think I was a history major in college, and I really care about history. And I think people who are saying that, they're not reading their history, because in 2008 we went down 57%, and in 2002 we went down 60% on the NASDAQ. So it's not generational yet, but there's a good chance it will get there. And I would say the pace of decline is generational. This is Great Depression level declines in an economy that was doing spectacularly till we had the virus come up. So I view it as a gift. I don't think we're going to stay down here for years and years like we did in the Depression. I think we'll see a significant bounce once all this gets sorted out, and I expect that to happen in the next 8 to 16 weeks.
When do you think we can come back to the old highs that we hit in mid-February? 29,000 on the Dow, for example.
Well, I don't like to agree with Goldman Sachs too often, because they usually have an agenda, but they said that they expect us to get back to 3,200 on the S&P by the end of the year, and I think that's a reasonable projection. I'm not going to second that, but I'd sure like to see that happen, and I think sometime next year we're likely to get at or near the highs, because with interest rates where they are right now, we're back to the thing where when the economy starts humming again, you have no alternative to stocks in your public investments. So this will turn around.
For somebody in their 20s, 30s, 40s, even 50s, and even low 60s, triple Q is not such a bad deal. It's an index, obviously, a lot of technology in there. If you're saying that the NASDAQ can get back to the old highs in about a year, that's a screaming buy for somebody who has that kind of time frame.
It is a screaming buy. People are looking, saying look out below and looking off the cliff, and what they should be doing instead is looking up, because if you get back to 3,200, 3,400, the old highs, or the projection that Goldman made, you're making 35% from these levels. I mean, that's a great return. So people should start thinking about that. And if we go lower, think of it as an even bigger opportunity. You want to be more aggressive and more greedy, as Warren Buffett says, the lower we go.
Got it. George C., thanks for coming by. We'll be after you again, looking for that bottom. George C., everybody.
Thanks, Stuart.
Thank you very much, sir. Appreciate it. Now, earlier today, we've been discussing New York